Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and we saw the bulls bounce it yesterday off the lower band, and we've stalled out in the 2020 area, just a couple handles shy of the middle band, which is not surprising. As long as we are trading below the green line, below the 20-day simple moving average, this is a market that is going to want to sell rallies. So with this push last night, the Bears still remain not in total control, but they have the advantage. As long as we're below the green line, the Bears are going to maintain their advantage. And you have to understand that the Bulls have put so much overhead resistance in layers, 62, 54. Then you've got the weekly pivot at 33. You've got this moving average cluster. You got the 50-day coming in at 2026 half. You've got the middle band coming in at 2023. These are all layers of resistance that cumulatively are going to be very difficult to get through. So can the Bulls jump over all of this? Absolutely. They've done it a number of times in the last 2 years. But until they do, you can do well in understanding that the majority of the rallies, in fact all of them except for one, are going to be sells. And the one that isn't, you just control your risk and then see what the bulls can do. And then you start buying dips. I mean, that's been the way to play any pullback in this market for the last 18 months. You can't get convicted. You can't get, ideological, because those people always lose. The ideologues lose. You just have to trade a tape that's giving you as much as this one's giving you intraday. It's a fantastic two-sided market right now, and I would expect more of the same as we head into today. Decent longs and decent shorts. Just understand that the prevailing theory at this point, because of the inability to get through the middle band, is sell rallies, which helps you keep your head on straight when we're bouncing from 82 up to 2020. Yesterday's low matched up with our proprietary lower level, so we were able to get in yesterday, not at the exact low, but within a handle or so. But once we got the trade into a position where it was 20 or so handles up, we took it off. And did we take it off 10 handles early? Yeah, but that's just what you need to do when you're focused on selling rallies. You understand that those longs are counter trend. You take your money and you wait for the next setup. It comes up into the middle band area, into the pre FOMC print, which is also at 23, and you see the sellers come in. My biggest problem with this market right now is that all this keeps happening at 1, 2, 3 in the morning. There have been some fantastic highs to sell in the middle of the night here in the States. So, but the markets do that sometimes, and once everybody starts staying up and waiting for those highs, it'll revert and we'll get back to things happening mostly in the regular session. Okay, everybody have a fantastic day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. It was really nice yesterday to be able to walk everybody in the room through that low at our lower level on a live chart with audio. People are loving it. The trials are loving it. We got a lot of new people coming into the room, and the ones that come tend to stay. So if you trade this stuff all day, come check us out. See if we can help you. We'd love to meet you. I will be back Monday morning with another webcast. Trade them well, everybody.